Did you know that today is going to be the biggest online shopping day of the year in the UK? According to a report published today, shoppers are expected to spend a total of £180 million online today. Peak online shopping hour will be between 1 and 2 p.m, when we're predicted to spend around £14 million. But it's not restricted to the lunch hour. More than a third of online shopping today will take place either before 9 this morning or after 6 o'clock tonight. And you could see just how much wrapping paper you needed. Well, joining us now from central London is internet shopping and personal finance expert Paul Banfield. Mr. Banfield, thanks for joining us. How do you start to shop online for Christmas? I'm always a bit worried about it myself.
Well, I think obviously people now feel much more confident shopping online than they ever have done before. And that's one of the reasons that we're seeing such a massive spend up today. But of course, it's important to remember it isn't just today. This has been going on now progressively for years. And we're really sort of concerned in a way about people spending on credit cards. We want to make sure they're doing it sensibly, as well as, of course, making sure they get the best bargains by shopping online.
OK, how do you start to get a best bargain by shopping online?
Well,
Come on, give me a few tips, Paul. I've got no idea how to do this, and I'm looking to you to advise me accordingly.
OK, well, lots of people, when they do a search, tend to go on to the company that comes up and makes that purchase straight away. So my advice would be, of course, to shop around by using all of the tools and the search engines, really not committing to that first purchase. Don't be tempted by all the flashing on the screen, the buy now before it'll be gone. Really take your time. Just because you're shopping online, it's no different to going to the shops. You know, take your time, look around. Make the purchase when you're sure you've done the comparisons. That's very, very important because, of course, a lot of companies pay to be higher up the listings and they know that they're going to attract a certain amount of business. It doesn't mean, of course, that they're the cheapest.
Paul, I'm always worried about putting my credit card details, though, into that thing that says it's a secure site, blah, blah, blah. Is it?
Well, mostly yes. I mean, with the reputable dealers, then of course there's no problem at all. It doesn't mean there's no fraud there, though, I want to add. It's always best to use a credit card rather than a Visa debit card because the protections are a lot higher when you're using a credit card that you're paying off in the future rather than it's a card that's coming directly out of your account. And that's because the banks and certainly the credit card companies have set it up that way. So A, shop around, but B, use your actual credit card rather than a debit card, because certainly if there is any fraud, that will offer you the highest level of protection that you can have. But of course, we all hear about the bad stories, and they are out there, of course. Just make sure that you're never responding to any emails that come into your inbox saying, please can I have your credit card number to confirm your purchase. No properly set up company would do that. It's the information you're entering on that is the one and only time that you should be doing that.
OK. Well, Paul, just stand by for a second because, of course, people aren't just shopping online and they're spending money in all sorts of other ways as well this Christmas. Shoppers in Britain are expected to spend a total, we're told, of £16.9 billion on gifts, the highest level that for 12 years. The Christmas Retail Survey predicts we'll fork out £378 each on presents, up £68 we're told on last year. We're expecting to cut back on socialising, £121 this Christmas, down from £144 last year. You Scrooges, you. Including food and drink, the total cost of Christmas will rise to an average of £662. But we're not turning to credit cards to take the strain, we're told. The amount we put on credit this month is expected to be down £100 million on last year to £11.4 billion. And as we've been discussing, many of us are turning to the internet to find a bargain. It's predicted the total online spend this December will be £3 billion. Well, Paul Banfield, personal finance expert, still with us. Paul, are you surprised that people are not putting as much on their credit cards this year?
Well, last year was, of course, silly numbers, so we're not surprised that the level of credit card spending's down, but of course we need to wait and see, certainly for the end of today, to see if a lot more people are in fact going to start using credit cards again. And you normally find the nearer you get to Christmas, the more people start to panic and think, have I spent enough? Or they get the feel-good factor and they use the credit card. So I think we've still a couple of weeks left to see if that trend completely is on. But certainly, you know, internet spending money on the internet for a bargain is a positive and good thing. I wonder really whether people are still spending within their means. We've had a couple of interest rate increases recently, and my message very much would be, don't spend money you haven't got, even if it's, you know, not on the credit card. It doesn't mean you shouldn't be spending. We need to budget, make sure that it's sensible. And of course, if we do this, then Christmas can be a whole lot more enjoyable, knowing that the gifts that you're giving are, of course, from a budget that you can afford. But, you know, I'm bound to say that, and I don't want to be a spoiled sport, but of course, with a personal finance background, my concern is that people are not pushing themselves too far, and that they are not leaving themselves with a big headache in January, of course, thinking, how do I pay for all of this?
How much are you going to spend this Christmas?
That's an excellent question. I only spend what I need to, but I do make sure I get all of the
That's
bargains.
not a very good line, is it? I hope that your beloved is not listening when you say I only spend what I need to. Goodness me.
I certainly hope so, but there we go. There's the financial advisor in me.
OK, so what are you going to buy? Diamonds, maybe? Or?
Well, they're certainly a good investment. I mean, for anyone that can afford to buy diamonds, that's a great thing to do. But, of course, put them away, don't wear them. Again, you know, looking on the financial side, there are some investments people can make that do increase in value. Pictures, works of art, certain items of jewellery. And, of course, some people can appreciate them and wear them. Others will put them away. But yeah, for those that want to spend a little bit more maybe than the average, you certainly can get some things that are on the way up, and will continue to do so.
OK, Paul Banfield, thanks very much indeed for your expertise. We appreciate it.
Welcome back. You're watching Squawk Box's Countdown to the Open on CNBC Europe. I'm Steve Sedgwick. Well, according to reports, the UK Financial Services Authority is looking into ways it can reform the sale of financial products to regain consumers' trust. Two of the most radical changes could include an end to the independent financial advisor and an end to the hefty commission paid on pensions and other savings products. So will the new reforms be implemented? Well, for more on this, we're joined by Paul Banfield, Director at Best Advice Financial Planning, which is an independent financial advisor. Paul, thank you very much indeed for joining us. Well, it seems strange to talk about the demise of IFAs when you are an IFA, but are IFAs on the way out?
Well, I believe not. At the moment, 25% of all products that are sold by the financial sector is in fact advised by independent financial advisors. So quite the opposite. We're not actually worried about the changes. We're looking forward to reform.
Have you got a bad press? I mean, is it down to the IFAs basically grabbing their commissions, or is it actually the real discontent in the industry is the fact that the underlying investments haven't performed because the pension fund managers haven't been good enough?
Well, I think quite the opposite. We shouldn't focus just on independent financial advisors. Oh, the bank's just grabbing their commission and running. So it's a sector problem. What we need to do is make sure that the report focuses on the matters in hand, which is the public getting the best advice that they can from the marketplace.
James?
Paul, it seems to me that independent financial advice for big-ticket investors who've got a lot of money and therefore can afford to pay a decent fee absolutely will be really important. But how do you reckon you're going to be able to provide scalable advice to people who, say, got £10,000 to invest and for whom, therefore, a reasonable fee to an advisor is a big slab of the initial capital?
Well, at the moment, we're focusing just on commission, but there's far more than just the commission issue. For example, some of the banks currently are also equally not advising people on pension products when there needs to be good advice out there. So the industry, of which the independent financial advisors are a big part, need to look at a way that we can provide advice across the UK to people from all walks of life. But, you know, don't be under any illusions. Independent financial advisors are helping public from every walk of life, not just people with, you know, money in the bank, big sums of money. They're helping all sorts of people, and it's important we continue to do so. But it's a job that the whole sector needs to look at. We don't want to just focus on one, of course, which is 25% of the sector.
But the industry does need reform, it's very clear. I mean, people are turning their back in droves on a lot of pensions and annuities and what have you, because they just, A, don't understand it, B, they don't like the commissions, and C, as I say, the underlying investments haven't necessarily worked for them, as after James James is saying, the big fat commissions. I mean, what needs to change? I mean, clearly something needs to change, even if it's not just with the IFAs.
Well, firstly, the public don't say they don't want to deal with financial products because of big fat commissions. They don't want to deal with financial products because they don't understand them. The government previously hasn't helped with all the changes on pension legislation, which has frightened a lot of people. We need to make sure that the public understand about financial products. One reason that people don't take advice is because they prefer to use the internet, and that's fantastic. They should continue to do so. But obviously, for more complex investment products, they need to take advice.
James?
So what do you reckon a full fact find to comply with Know Your Client should reasonably cost an IFA to deliver?
Well, that's a question that totally depends on the type of advice that they're looking for, because of course
If you wanted full advice, so if I walked in and said, look, I've got £10,000, what should I do? And you said, right, let's begin at the beginning and take it right through all your life circumstances, exactly what you want to achieve. What do you think that should cost?
Well, if I answered that question on behalf of one practice, that wouldn't represent the overall view. But what I would say is an investment is a long-term product. Therefore, if we're giving advice, we're not just looking on that one meeting with the client, we could be looking at 10 and 20 years in advance. It all comes down to the type of advice that an individual needs, and that's a question not only for independent financial advisors but for the banks and other financial institutions as well.
But I mean, just looking at various of the reads, my anticipation is that the FSA is anxious to stress it does not want to impose rules on this. It wants almost a self-regulation here. But surely the FSA, after so many messes over the last few years, including endowments and split caps and what have you, surely the FSA needs to come down harder, doesn't it, across the broader industry? Well,
they're looking at the way products are distributed for the future. And of course, it's good that they're looking into the future rather than leaving it too late and then saying, look, what do we do all of a sudden? So I think that the report commissioned is a good report. It's good to look into advice and all the different channels. We should use it as a positive in the UK that it is being looked into.
And at the end of the day, whether you're getting your commissions from the people whose products you're selling or whether you're getting it up front from investors themselves, the rates are going to stay pretty much the same. Someone's got to pay, and that's something. These costs aren't just going to disappear, are they, regardless?
Well, it's a really good point. I mean, obviously, independent financial advisors, just like the banks, need to be paid. Whether the public are happy to pay a fee or have commission taken from their product is their choice currently. Of course, the public have that choice right now. Why would we take that choice away? If they can choose commission or fees, most people go for commission. Why? Because they don't want to pay a fee. So we shouldn't, as a regulator, then impose the fact that people must pay a fee. Let's leave it to freedom of choice. That's the way forward.
Paul, nice to hear from you today. Thank you very much indeed. Very contentious issue. Paul Banfield, Director of Best Advice Financial Planning, looking at potential reforms in the UK pensions industry. Well, let me bring it back to you, James, on this issue, because it's not just the UK that has gaping pension deficits, both at a public and indeed a private level. We're not investing enough for our future demographically, which we're all getting older, especially you and I, James. So
True.
What about this on a pan-European way? I mean, there isn't a solution. There isn't an easy solution, is there?
No easy solutions, because basically consumers do not want to cut back current living standards in order to pay for a better tomorrow. It's an eternal problem.
Now, it seems there could be up to 1 million of us paying the wrong amount of tax, according to a survey carried out by the National Audit Office.
Yes, the study found that nearly £300 million was either over or underpaid last year, and the report warns it's the most vulnerable in society who suffer the most.
So, could you be paying too much? Let's speak to Paul Banfield, who's a personal finance advisor. And very good morning to you. How do we check if we're paying the right amount of tax?
Well, it's very complicated, and of course the issue is most people are scared of tax. They don't want to be paying it. No one likes to pay tax, but the last thing we want to be doing is paying too much. How we can go about checking is to speak with our employer, who certainly should help to check our tax code, and for those that are self-employed, to use the advice of their accountant.
Would our employer be able to tell us if we have the right tax code? Because many people get income from lots of different places. If they have, for instance, more than one employer, or if they have shares income or other forms of income.
This is the problem, of course. Everyone's tax position is very different, but an employer can offer access, and that's the main thing, access to advice, so that at least the individual can start to take that advice. We can use internet sites like unbiased.co.uk that has a tax table on that will enable people to work out for themselves what they should be paying, and obviously do some home research.
Tell me a little bit more about these websites, because of course a lot of people are quite frightened about the tax return in itself. It can be complicated. You have to get a lot of information in order to fill it in correctly. For some people it's a real struggle, isn't it? Do you have to put all the same information into a website just simply to check something that really the Inland Revenue, a lot of people would assume, should tell you anyway?
Well, they are designed to be easy to use, and of course, going back to the Inland Revenue, they are quite efficient at collecting tax. Last year alone, they collected £149 billion. Of course, there's going to be some errors there. You know, the last thing we want is people paying too much tax. As mentioned, it's bad enough we pay the levels that we do. So individuals should definitely take advice on using good websites, speak to accountants, speak to their employer, who I'm sure can help, and then also do some reading on the subject. Most of us are very standoffish when it comes to tax. A little bit like, you know, a school teacher or a big institution, or I'm not sure I want to question what I've been asked to pay, but we must question it, because we're losing on average £300 per individual that's being overcharged.
OK, Paul Banfield, thanks very much.
Now, while homeowners count the cost of 5 interest rate rises in less than a year, savers are being offered record-breaking incentives to invest their cash.